Hey guys, Mandilaki here again. Welcome to my YouTube channel once again. Today we're going to be speaking about three important aspects to consider when you are choosing to go the real estate investment route to create or generate wealth. In South Africa, these three aspects contribute to why South African property market is an option. However, three options that you have in order for you to use the property investment space as a wealth generating tool. We're going to exclude your primary residence this time around so that we can consider the business aspect of it. Firstly, you can buy a property to rent it out, right? So what that does is actually first, if ever you're going to use the strategies that we've been suggesting, you have the advantage of being able to leverage the bank's money in this. For someone who does not have any money that's lying around to start a business, but you are working and you want to start generating extra income and you want to grow your asset portfolio, this is a great way and a great place to start, because all you need in order for you to start in this as an individual is a payslip. As businesses, for sure, businesses might have a little bit of more stricter rules that apply to them if ever you want to use your business in order to buy properties, whether you want to rent them. Most likely you're going to use them for rentals. Banks favor, this is something I always say, banks favor pay slips over annual financial statements. But then this actually enables you to access the bank's money for you to acquire an asset that appreciates in value over time. And when you use it or when you buy it to get rentals, it actually gives you a monthly income in the form of rentals, which is there is more than just one benefit in this, in that you get the bank's money to buy an asset that appreciates in value and that guarantees you rental income on a month-to-month basis. For sure, there's a risk factor to that. In any other business, there is a risk factor of potentially not having a tenant, but also there are measures to mitigate that. We're going to take all things as if they're consistent. So we're going to speak about the things that are key, that you actually would get as a benefit. So whether it's a long-term strategy or it's a short-term cash flow benefit kind of setup where you buy property and you want to get a positive cash flow return immediately, both of those are catered for in the fact that you can use the bank's money to get that asset, and then it'll give you both appreciation in the value of the asset as well as the rental income. If you are in the negative, where you probably bought in a development, what normally happens there is that people who have a long-term strategy, they would buy in a development within a complex. What normally happens there is that the bond is normally, when you take into account the bond, the levies, the rates and taxes, normally the owner of the property needs to chip in for a number of years before that investment can turn positive in terms of the rental income. That's what we call the long-term strategy. That's the capital appreciation. Your reason for buying in that particular setup is for a long-term return, where the value of that asset is going to grow to the point where it will be more than the debt that you owe the bank, first of all. Secondly, you know that the rental income from that particular property will also supersede both your bond repayment as well as your rates and taxes and your levies. Because of, if you use your investment calculator to actually predict, because bonds normally take 20 to 30 years to repay, and there is a rule, actually a rule of 72, where you can calculate how long it would take for the value of that property to double. If you take the value of the property, if you take the growth rate of properties in the area you are buying in, and you use that to divide 72. So you take the number 72 and divide that by the rate growth rate of that property of property in that particular area, then it would give you an idea of how long it'll take for the value of your property to double up in value. It's just talking about the value of the property before we even get to your rentals. What that then tells you, for example, let's just say in Joburg, we can take a conservative number like 8% being the growth rate, maybe for the past 5 years. And then we would take 72 divided by 8%, and that would give us an idea of how long it would take for the value of properties in Joburg to double. Taking that, it would actually continue like that for the next 20 years to 30 years. That gives you an idea of how you can calculate how long it'll take for your property to actually double up in value. But then also you can do the same with the value of increase, or with the increase in your rentals, to see when your rental amount will double. You take that 72 divided by the rental income growth rate, and then you would get an idea of how long it would take for that rental income to double up. And you must take this into account when you're thinking about this, that over the years in your real estate investment, your bond is static in that it does not grow, because when you get that property registered in your name, the bond remains at that level as the initial credit amount the bank gave you, and then it reduces over time as you repay, right? But the value of your asset is going up. So there's an inverse relationship between the value of the property and the bond amount that you owe the bank. So at some point, the value of the property exceeds the outstanding amount that you owe the bank, which is called the liability. And then there's what we call equity, right? And equity then is what you own. It's your ownership in the business of your of your real estate investment business. So it's what the bank will give you if you request it based on affordability. Again, we'll talk about refinancing in one of the videos. So I want you to consider these things, that these are the benefits that are there, and numbers normally are some of the things we need to look at. We will actually have a video where we'll be specifically looking at the costs. We'll be looking at the numbers in terms of the values of the properties and the outstanding amount of debt, so that we can actually give you a clear picture. So that was the first one, where you are buying to rent. Second one, you can actually buy to run an Airbnb business, right? So if you're going to run an Airbnb business, it means you are going to do short-term leasing. Short-term leasing is working. It's actually become one of those famous businesses now in South Africa. There are a lot of people that are turning their homes into Airbnbs because there's a high demand. You've got bookings.com, and you've got all these other platforms where you can advertise your property. Depending on the style and feel, it can attract a certain market. And normally the returns on the Airbnb are higher because your rental is not static, it's not standard, and it does not increase annually. So it depends on season, it can be seasonal. But most people that I've heard and that I've spoken to that are running Airbnbs, they are making way more in their monthly income than what they need to pay for the bond, as well as the rates and taxes and the levies that might be attached to the property that they buy. Then the last strategy is your flipping. Your flipping is when you buy an undervalued asset because it might have been damaged, it might be old, or it might just be it might have been owned by someone who is distressed. So it's a distressed property. Then they might sell it at a lower value, and you buy that, you fix it up here and there, make it look good, and then you sell it. So you are not in it for the long term. Yours is to go in, make a few changes or a few touch-ups just to uplift the look of that particular house. Then you put a markup so that you can realize the profit on that particular property. So those are the three strategies that I would say one can consider. There's more that you can do. As I've said, that I've excluded the use of a primary residence here, but you actually can look at these three strategies as ways in which you can use the real estate investment space in order for you to generate wealth. I hope you will do the right thing and subscribe so that you will get notified as we continue to put on new content. Mandela here. Thank you.